Mr. Gomes, you're since 2009 a member of the International Accounting Standard Board, and before you were the head of financial systems regulation in the Central Bank of Brazil. I'd like to ask you a few questions about IFRS implementation. Could you tell us first what were the key economics benefits brought by IFRS adoption in Brazil?
Well, actually, the most important aspect when discussing about IFRS implementation was the direct benefits that a better source or a better quality and a better information provided by IFRS and a more transparent set of financial reporting provided by IFRS adopters could bring to Brazilian companies, Brazilian entities, and then facilitating the process of those entities to access financial markets abroad in a country with a lower level of domestic economic saving. This was key for us in attracting investments for long-term investors for long-term investments in Brazil.
Yeah. Could we say that there was also a reducing the cost of capital that was seen after IFRS adoption?
Yeah, one of the aspects that we generally consider when adopting IFRS in keeping a dual accounting system, first is the reduction of operational costs in general. So a Brazilian company used it to prepare a set of financial reporting under Brazilian GAAP, also generally needs to prepare a set of IFRS compliant financial reporting when searching for investors from Europe mostly and Asia as well. So then the reduction of operational costs was one of the aspects. The second was the reduction of costs of capital. Although we do not have information that can be easily traced because of the aspects that we have to control, such as the cost of capital and the level of risk and rating of the country itself. Most financial entities that searched or that accessed financial markets abroad using a set of IFRS compliant financial reporting asserted and informed us that they did experience a reduction in the cost of capital.
Thank you very much. What, from your experience as a central bank supervisors, what is the key challenge that a supervisor faces when a country adopts IFRS?
I guess the key aspect under the supervisor aspect is the level of judgment that the set of IFRS literature requires, because it's a structure based on principles and not in rules. Generally, supervisors feel more comfortable and it's easier in performing their tasks if they have a set of rules that can be easily traced and used to monitor financial entities. Since IFRS literature base is structured in principles and then requires a much higher level of judgment, this places significant concerns in some supervisors, particularly when those judgments are involved with the valuation of assets and liabilities in general.
Well, last question. Do you think that prudential frameworks, for instance for banks and looking at impairment of non-performing loans, will see a convergence with IFRS in the future in Latin America?
Well, as far as I do know at this very moment, most supervisors in Latin America developed in the last decade particular systems for loan and loss provisioning in the banking sector, where we have different objectives. The IFRS literature is based or is aimed at investors in general, the providers of finance. Banking regulators have a different objective in mind when setting loan and loss requirement. So I do not foresee at this very moment those regulators changing from their systems of loan and loss provision to a system required by IFRS, because apparently this could generate a lower level of provisioning consider what they do have today. So maybe in the future, but at this very moment, it's unclear to me that they are going to move from their system to a system developed by the IASB.
Mr. Gomes, thank you very much.
Okay.